Hi, welcome to this Tuesday's update on the markets and factors. We've decided to break up the videos into two parts. So we'll be on the Tuesday videos, we'll be talking about the weekly update. We'll try and do it probably on Mondays as well. And then after a couple of days, we'll talk about the topic for the week. So we are breaking up the format a little bit and making the videos more crisper and shorter. So please let us have your feedback on that. With that, let's start on the week that's been. Last week we missed out. Uh, but let's look at the performance of factors last week and the week before that. So, quality is done pretty well last week, and that's obviously when we look at the sector performance, we'll know what kind of sectors have done well. Momentum had an okay week. The overall market was sort of flat, so we've stopped going down as we were in June, May, June, and we're sort of taking some support here. If you look at the monthly, we can see that momentum is done about 5%, recovered about 5%. The market is up about a couple of percent, and quality is lagging slightly. But everything is in the green. So, it's not a bad time in the last couple of weeks. Year to date is still down across the board, with small caps taking the largest hit. Value is also negative now, momentum is also negative. Quality is taking the least hit. So overall, the market remains weak on the weaker side in a downtrend. As you can see, all factors are still in a downtrend. But we are sort of stabilizing here. We're not going down a lot more, in spite of further bad news coming in from the US in terms of inflation numbers, in terms of oil has cooled down a bit, but it's sort of, so we don't know whether it's a pause here or whether it's just the calm before the storm, but we're prepared for either. Let's look at these sectors and how they performed. IT continues to take it on the chin. TCS numbers had come last week, which were not great. The outlook was not great, and I think that is sort of rubbing off on most of the IT packs. Energy, pharma is doing okay. Auto is doing well. FMCG is doing well. So that part of the market still doing okay. On a monthly basis, we still have FMCG doing the best. Auto is catching up. Realty is not done, badly this month. It's only IT which is in the red for the month. Let's look at for the first 6 months. Almost we've completed the first half of the year. So energy and metals were doing really well, but now it's mainly energy which just stands from in that pack, and FMCG and auto are the ones. Auto we've been seeing for quite some time now is in an uptrend, but it's mainly FMCG and energy and auto which are in the green. So we can see in the up sector trends also that auto and FMCG and energy which are in an uptrend. Besides that, all the other sectors will remain in a downtrend. So, if you want all this information and data, we provide that on Factor Investor or Substack.com. This is our, factor all weather allocation still in a risk-off mode this month. While we are seeing some bit of recovery, we're still in the middle of the month, so it's hard to say what it's going to be by the end of the month. But currently, the last 3 months, we've been in risk-off mode. The markets have been volatile, have been directionless, I would say, now in the last 2 months. So just doing their thing. So in those kind of markets, it's just better to, if you're a long-term investor, just keep on investing, continue with your SIPs. If you're an active investor, you can take some tactical calls. But other than that, it's at least stopped going down. So just disclaimer that this is not investment advice, purely for education purposes only, and please consult an investment advisor before investing. Uh, these are my Twitter handles, and this is our website where you can visit us. So thank you for that, and see you again next week.